folks, to another episode of Just Business Talk, a podcast where we speak with entrepreneurs and people who are involved in merger and acquisition. So today our guest is John Panaccione, CEO of Folla Capital. John on a mission on helping small businesses unlock growth through innovative crowdfunding with a strong record in tech and capital raising. From guiding companies through the ins and outs of jobs, acts to supporting veterans and entrepreneurs, John's insight on funding and resilience are invaluable. Let's jump into the journey and explore the exciting shifts in the world of business. Welcome to the show, John. Thank you so much for being here today.
Hey, thanks to here. I feel privileged
John,
to be here. Thanks
kick
for
us
having
off
me.
by telling us a bit about yourself and the story behind Folla Capital?
Sure. Well, today I'll start at the end and work my way backwards. Folla Capital, we're in our fifth year. We're an SEC, Securities and Exchange Commission registered broker dealer. So in that role, we are regulated by the SEC through FINRA. And we're in the business of advising companies and investors to some degree on investment strategies for small businesses, both startups and existing businesses. I can get into what was before that if you'd like.
And so what inspired you to help small businesses raise capital through the Jobs Act of 2012, and how was Folla Capital's mission evolved since its founding?
Yeah, great question. It's because I was an entrepreneur at one point. I did a startup in 2003. And we were a services company when we started up. But by the time I sold it 17 years later, in 2020, we were a 90% recurring revenue software company. So during that journey, even though I had an MBA when I started, which people think getting an MBA is the magic golden key to success, I didn't know what I was getting into with financial issues. So as an operator, I had to stay in business, raise capital from investors, deal with banks, and stay in business to make it to the finish line and an exit. So I learned a lot by doing, and I feel it's the only way to do it. So today I like to help others that are down the trail behind me, trying to figure the same stuff out, but in a way that's much smarter than the way I did it.
So John, walk us through the so what for many of our listeners who are not from US and including me. So what the Job Act actually is and what kind of regulation is around this having this crowdfunding model?
Yeah. So first of all, the word crowdfunding, I'm not a fan of because people think of like Kickstarter and GoFundMe. That's called pledge crowdfunding, and it's illegal to offer a financial security through a pledge crowdfunding platform. So let me just get that out of the way. But when you use the word, that's what people think of. And investment crowdfunding, on the other hand, is what we're talking about with the Jobs Act. So if you look at a timeline, starting with the Securities Act of 1933, which is the law of the land for securities activity in the United States, it's a little over 90 years later. There's been a series of enhancements to that law, and the Jobs Act was the most significant one of late, and that was in 2012, and it's an enhancement to the Securities Act, and it created what I call a sixth exemption type called Reg CF, and the Congress named it Reg CF in the bill, and the CF stands for crowdfunding, but it's just another exemption where there's some specific rules we can get into, but there are other exemptions as well that we use in our business that have different rules. Okay. So it's just the most recent
And how many types of regs are there?
Well, there's a Reg A, a Reg D, and then there's a Reg CF. So Reg A came out in 1933, and then since it's got 2 levels, and it depends on how much you want to raise. Reg D has 3 different kinds, and you can raise an unlimited amount of money under Reg D, and then that makes about 5, right? And then the last one is Reg CF, which was authorized through Congress in 2012. That's one we all talk about, and that's called Reg CF. And you can raise up to $5 million under Reg CF, and it has some very
Right.
specific rules
John,
we can
could
get into.
you guide us through how do you help the small business owners to raise capital uh, using your, investment crowdfunding methodology? What is how does it work?
Yeah, so we're basically an investment banking firm, advisory firm, but since we're registered and able to raise capital, that's kind of the sweet spot of our
Mm-hmm.
business. But we do a lot of advising. So we work with a lot of clients to look at their situation and really
Yeah.
design a campaign. And part of the design of a campaign
Mm-hmm.
is doing a lot of due diligence
Right.
on that company because we have a duty to do so. And then we help them pick the right
Mm-hmm.
exemption, which I just walked you through. And then we also, the second big thing we do is we design a security, it can be debt or equity, that we then offer
Mm-hmm.
investors on our client's behalf, and we can facilitate that process. And that's how they bring
Right. And what
investment money
sort
into their
of
companies.
companies are your ideal, clients? You can help them to raise funding, like in terms of valuation or the revenue size.
We've got existing businesses, we've got franchises, and we have startups. I don't think we have an
Mm-hmm.
ideal client. Every one of them
Okay.
has slightly different needs. I will tell you, and I won't be the first, that startups
Uh,
are the hardest one to raise capital
Tech
for.
startup or any
But we do a
industry,
lot with
particularly
existing
tech
business.
or any other industry as well. Any industry. Okay. All
Any,
right.
yeah. And having owned a software company, tech startups are
Right.
extra hard because you
Yeah.
have no
Okay.
assets. Uh, so,
Uh-huh.
but increasingly, and why I'm on this podcast, I think we're doing a lot more buy side M&A advising, and we're using these
Uh-huh.
exemptions I talked about as a way to raise
All right.
capital to buy a
So
company.
that was my next question. So you can also raise capital for a buyer as well. So if someone is looking to acquire a business and you use the asset of the company they're going to acquire as a collateral, is it? Am I right? Or they need to come up with the collateral of the existing business or their existing assets. So how does that work for a buyer?
Yeah, yeah, we've developed a kind of cool, pretty unique approach. We think because we're a broker dealer, we
Mm,
can raise capital. I just went through that. So when someone wants to buy a company in the U.S., at least our
mm,
clients are not cash buyers. First of all, that we don't really
mm-hmm,
offer a lot of value to a cash buyer. We help people that want to leverage debt to buy a company,
mm-hmm,
particularly an SBA loan,
mm-hmm.
Small Business Administration loan. So there's two kinds of SBA loans, 7A and a 504. But basically combined, we can buy a company in the
Mm-hmm.
$5 to $10 million
Mm-hmm.
range, or maybe up to 15. So usually our clients are trying to buy companies that size, so they're going to use an SBA loan, which an SBA backed bank can
Mm-hmm.
authorize up to 90% loan against the purchase price. So now you got 10% left. And what we do basically is use our ability to raise capital for that 10% so that our clients can kind of put the two together. And we've worked with some banks to do that properly under banking regulations so that combined you can buy a company, without any out of pocket. But that's the good news. The reason we tell people to do
Yeah.
that is you are going to need
Yeah.
money.
Yeah.
You're going to need working capital after you
Right.
buy it. So save your money
So
for that when
basically,
it's worth
you
the most.
help business potential buyers to acquire a business with literally no money down because they get 90% from SBA and then 10% you help them to raise and then their 10% they can use as a working capital later on, right? Yeah. Yeah.
You got it. But it's not like this get rich quick scheme
Hmm.
like buy a company without any of your own money. That's not the reason at all. It's we
Yeah.
tell
In a
people you're
working
going to need
capital.
money
Yeah.
and show
Yeah.
us that
Yeah.
you have
Exactly.
some, but you're going to need it
So
later. Yeah.
when the business owner, even existing business owner or buyer, so what sort of guarantees or you take or collateral they need to provide to ensure that they'll pay that money back to your investors?
Well, under the regulations, there is no requirement that there is any
Hmm.
personal guarantees or collateral from the person raising the money. Now, the bank under SBA
No, no,
rules
I'm not talking
requires
about
that, just to
SBA.
be
Yes,
clear.
I know the SBA.
But when we raise
I'm not talking
cap,
about the
what's that?
SBA. I'm talking about the investment crowdfunding, particularly, not the SBA.
No, there's no regulatory requirement that there be any
Mm-hmm.
kind of credit
Okay.
score requirement or personal guarantees. In fact, technically, convicted felons can use the rule. The only constraint is we do background checks, and you cannot have participated in what's called a disqualifying event, and that usually regards a
Mm.
crime relating
Okay.
to money.
Right.
So if
So
you've
so
screwed over
basically,
some investors before or
it's more to
whatever and had
do.
some legal issues, you could not. Right. Well, under the regulations, there is no requirement for a personal guarantee, a minimum credit score, or anything like that. As a broker dealer, we have due diligence to do background checks and make sure that the offering makes sense to investors. That's an additional layer of due diligence a broker dealer
Mm,
is required to do. And unlike a crowdfunding
mm,
platform, which I can talk about, but the only thing that disqualifies someone in a significant way, and we check it in the background check, is if you've committed a crime relating to money. Basically, that's a
mhm.
disqualifying event. Um, but other than that, under Reg CF rules, pretty much
All
anybody
right.
can
All
use the
right.
rules
Either
to
it's a
raise
buyer or
capital.
a seller, same
Mhm.
rules apply. Yeah. So the process is the same. You're buying a business or you're an excess
It really
buyer
only
of it.
applies to the
Okay. And
buyer.
what about the
Yeah,
existing business owner who's doing a debt
yeah,
funding or giving away equity?
yeah. We do some refinancings. Can be used for
Right.
that
Okay.
as well. Absolutely.
And what about your investor profiles? Usually, your investors, anybody can come in and then start investing with you, retail investors, or you only take professional investors. So, what is the ideal profile for an investor? Is
Well, as you probably know, there's two kinds of
yeah,
investors:
yeah,
accredited and non-accredited. And only 11% of households in the U.S. fit the
hmm,
definition of accredited. And traditionally, those are your traditional investors. Now, there were some exceptions, but for 90 years in the U.S., by and large, the only people that would invest in a private business were largely
mm,
accredited investors. Just to be precise, though, there were a couple of exemptions before Reg CF, and still you can still bring in some non-credited investors and some of the other exemptions. But by and large, um, even especially prior to the internet, which is an
mm,
important point we should talk about, the activity of investing in a private business was mainly
yeah,
limited to accredited investors. Fast forward to today, lots of non-accredited investors are getting involved, and Reg CF really
mm.
is a good choice for that. So to answer your question, no, we don't care what kind of investor it is. It really depends on what the target investor persona looks like for our client that
Okay.
we're raising money
And
for.
how long the process takes from the time someone apply to you for a loan for you to do close that or find the money for the applicant?
Well, it takes us about 2 to 4 months to
All
actually
right.
package the offering under the
Mm-hmm.
rules of Reg CF, and then we go live, and then it can
Mm-hmm.
take up to 1 year. Statistically, it takes about 6 months. When you look at successful
Right.
crowdfunding raises, it takes about 6 months for a successful raise to run its
Right.
course
Now,
after you go
what is
live.
the approximate payback period and the interest rate you charge on those loans?
Well, yeah, just to be clear, to here, we don't. It's not up to us. We facilitate a process where our
Mm-hmm.
client, who is the business owner wanting to raise money, they're called an issuer. That's the
Mm-hmm.
word that's used under the SEC rules because they're issuing a
Right.
security to the public, right? So we facilitate that process. There are many choices that business owner has, and we can get into those choices. Several on the debt side,
Mm-hmm.
several on the equity side. We advise them on which one they should pick, and then they design the terms for that particular security. And that's the cool part about it. They get to make those
So
decisions, not
basically,
us.
you facilitate. So here's a business owner or someone who's looking to acquire a business, and you have pool of investors. So you prepare that profile as a broker, put that in front of these people, and then they decide. So the business owner sets the term, and it's up to the investor if they want to accept those terms and lend them money, right? Yeah. Okay.
You got
Right.
it.
And then you
Yep, that's
charge a
basically
fee
it.
from both
Yep.
sides, or who pays the fee for your services? Okay.
We charge a commission on the actual amount raised. It's 6%.
So who pays, the
Sometimes we do
investors
lower,
or
sometimes we go higher.
the business owner, their client?
Our client, our client,
Issuer.
which we call the
Okay.
issuer, we take it out of
Okay.
the actual amount.
Okay.
Yeah, we
And
disclose
the
that to
investors are putting the
investors,
money
but we
in
take
the
it out of.
escrow till you close the whole round. So the pool in the money, right? So several people can join the round.
Short answer is yes. Usually, there's the way Reg CF works. There's two numbers. There's a low number and a high number. The low
Yeah.
number is called the target. So once you hit the target, you can close on that first chunk of money and
Right.
take it out of escrow. You can then do multiple closings up until your goal number,
Right.
which is the higher number. So that's how Reg CF works, and it's unique to
Right.
Reg CF, by the way. And just to be crystal clear, you cannot use Reg
Uh-huh.
CF to pool money and then buy a business with it. We would use one of the other
Right.
exemptions
Okay.
I mentioned.
Got it. Got it. All right. Okay. And in case of if the issuer is unable to pay that back, so obviously all the uh, investors who have invested money, they will just go as one party and then try to recover their money, right?
Yeah, there's a lot of risks and there's a
Yeah.
lot of disclosures required. But yeah, that's
Right.
a high chance that that
Yeah.
happens. It happens all the time, but that's the nature of
Right.
that
Got it.
kind of investing.
Okay. So starting with North Carolina and Folla Capital has expanded nationally. So what challenges and opportunities have you faced in this expansion, and where are you currently taking the clients around US? In which states are you operational right now?
Yeah, so
Okay.
today we're national
Mm-hmm.
across the U.S. Because we deal with these exemptions, which are national in scope. We started in North Carolina, but that's before even Folla Capital existed. That goes back to my other company. And it's really not worth spending a lot of time on that because
Mm-hmm.
those state programs, because of the enhancements Congress made to the Reg CF rules, kind of made the state programs
Hmm.
somewhat irrelevant because the federal program now is much better than when it started. But today we help companies across the United States using those several exemptions across the U.S. I will say I'd like to spend a couple minutes on what I think
Mm-hmm.
the real story is here, which is the internet.
Mm-hmm.
And I mentioned this earlier. The internet has disrupted the process of raising capital, much like it's disrupted
Yeah.
every other aspect of our lives. Yet the capital raising industry is still stuck in this mindset that
Mm-hmm.
it's 1985, right? So if you think about, the analogy is Uber, but we still need cars, but the way we use those cars, driven by the
Mm-hmm.
internet, i.e., Uber, is very
Yeah.
different than we ever imagined, right? Well, the same thing is
Mm-hmm.
happening with raising capital. We're using the internet in innovative ways to reach new investors. We still have to do it according to the rules, but if you apply the internet to the process of raising capital, by the way, you have to use the internet for Reg CF. That's one of the unique things about it. You don't have to use the
Mm-hmm.
internet for the others, but if you do, amazing things can happen. And that I call that the
Mm-hmm.
modern way of raising capital. Same rules, but driven by the internet, you can manage the
Mm-hmm.
process differently, and that's
Right.
really
Okay.
the story
And
here.
would you tell us the pros and cons of raising capital using investment crowdfunding and the traditional options available like bank loans and other SBA loans? And so, what are the pros and cons on both sides?
Well, good question. I love that question. So, because I had to do it the old-fashioned way. So, the old-fashioned way
Mm-hmm.
is I like to joke around, like
Yeah.
you hope and pray. So you do your little you do your little presentation. You get that polished. You
Mm-hmm.
practice it in front of a mirror, and you walk into a room full of
Yeah.
investors, and you do your pitch. And one of your slides has
Mm-hmm.
what you're looking for money, and then it's an endless. I probably, and I'm not exaggerating, over 17 years, I probably did
Right.
300 of those things. And it's an endless, inefficient way. And then I call it, you get on bended
Mm-hmm.
knee with your tin cup. And even if they like you and they like your company, which
Mm-hmm.
happens, of course, you're going to have to live. And then they slide this thing called a
Mm-hmm.
term sheet in front of you, and you have no idea what you're reading. You have
Right.
no idea how those things work. They have black belts in that
Mm-hmm.
stuff. We have a white belt, right? So you accept it though because they give you the money, and this happens across the country at all different levels. That's the old-fashioned way of doing it, right? And it still happens, and they're great people, and the economy hums because of those investors. I'm not being derogatory, but that is the process. The new way is what we talked about. You package a
Yeah.
deal under the rules, you design a
Mm-hmm.
security with your terms in it, and then
Mm-hmm.
you use the internet to cast a very wide net to get a very small percentage of a large number of people to like you, like your company, and like the terms you're offering, and then they invest in your company. It's night and day different, and I call that the modern way
Right,
of raising
got it.
capital.
And in your perspective on equity versus debt financing for small businesses, so and when might not one more be beneficial than the other? So what do you advise your clients to do when they come for you for advice?
Great question. So I tell the advice we give is to our companies is start with who is your target investor, just
Mm-hmm.
like launching a product. Who do you think is optimally going to invest in your company? Now, for some companies, like for example, a local
Mm-hmm.
gym, maybe, right? Somebody 6 states away in a different time zone is not going to invest in your gym.
Yeah.
Gyms are not scalable, so you're not going to get an angel
Mm-hmm.
investor or VC. But you might get a bunch of people within walking distance or driving distance who
Mm-hmm.
might use the gym. You might target them to be investors. Now, when you break it down from there, let's just say, okay, that's our target
Yeah.
investors, people in that neighborhood. Now you got to ask yourselves, there's a high likelihood that they've never invested in a private company before, particularly if they're not accredited. So people don't know what they're doing with
Mm-hmm.
sophisticated equity deals.
Right.
So don't use equity. So use something like a revenue share agreement, which is really easy to
Right.
understand and it's debt, right? You're going to pay them back as a percentage of revenue until they get a
Mm-hmm.
multiple of their money back. Easy, easy, easy for anybody to understand. So we would recommend in that scenario, use debt, use an RSA, and then better yet, add some perks to it, like maybe half off your membership at
Mm.
the gym, stuff like that. And then
Yeah.
you package that up into a security offering, and then you
Great.
run a
Yeah,
campaign
it
with them.
does.
Does that make sense?
I'm not sure in US, but I'm involved in buying, selling businesses in small. Not many business owners are, you know, they are aware of the concept of investment crowdfunding or raising a capital. This is very innovative, and I think it's a great way of raising capital. So, what advice would you give it to the business owners who are listening to this podcast and they want to get into it? So, uh, what advice would they give to the business owner who wants to raise capital using this? What changes they should make to in their businesses to be eligible to raise money in that way?
Yeah. So, first of all, a lot of
Hmm.
businesses that I see need a lot of help just
Right.
cleaning
I'm
up
going to
their
ask you a
act for
question.
investors.
In
Their
US,
finance,
do many business owner knows this method of raising capital or no? No. Yeah, I suppose so.
no,
Yeah.
no. No, and I'll tell you, it's kind of a I get emotional about that because there's a lot
Right.
of bad advice out there. There's a whole industry of people that will tell you that they
Mm.
can raise capital for you, and the problem is, as I was as an operator and as a startup entrepreneur,
Mm.
I had no idea what I was doing. So I would listen to somebody and take them at face value, and I got a lot of bad advice. And I think a lot of that's driven by the service providers in the industry. But I won't go down that rat hole. But I think just basically, basic business 101, we have to have a really well run business. We have to have clear sales pipelines. We have to have a definable process, sales process. We have to have
Mm-hmm.
clean books for sure. We can't have a customer concentration issue, right? So those, no matter what business you're in,
Right.
those are the basics. And I'm just shocked at how many companies just don't put a lot of time or effort into that. And then they go to raise money
Mm.
and it's a disaster, right? You can't package up an ugly looking thing in a clear plastic bag and get investors to invest in it. So the advice I give businesses is run a clean
Mm-hmm.
ship, have good processes and good documents and good financials. That just raises the bar
Yeah.
significantly on the
Yeah, great
chances of you raising
advice.
capital.
Means like prepare, show the future, path to the future to the prospective investors that how they're going to get their money back. So this is very important. Yeah. Yeah,
Yeah, absolutely. And just
exactly. So
run your
you
business
ran
that way.
Logic Bay for 18 years before selling it and returning capital back to the shareholders. So what were some of the key lessons you learned during that journey? I'm sure there are many, but so if you have the
Where
key
do I
lessons,
begin?
I can see that from your expressions there.
uh,
You really want to open your heart out.
yeah. Well, I'll tell you a big one, which
Mhm.
I talk about a lot on other
Right.
podcasts, is leadership. You, you got to be a good leader to succeed. And everyone listening to this podcast, I would encourage you to do a self assessment. Are you a strong
Hmm.
leader or not? Right. And some people have tremendous leadership experience before they go down
Yeah.
the entrepreneurial path. Like I work with a
Hmm.
lot of military veterans, for example. We get a lot of
Right.
that in the military, right? Others don't. And running a business is not an academic
Okay.
mathematical
Right.
exercise. It's leading people. And there's really three kinds of
Hmm.
entrepreneurs. There's creators, there's operators,
Mm.
and there's leaders. Uh, some are all three, but we all have a strength in one of those. So if you're a creator, you're a startup entrepreneur, you can
Yeah.
build a team of
Mm.
leaders and
Yeah.
operators around you, right? If that's you. If you're a good operator, but you're not really good at leading and kind of life has told you that,
Yeah.
franchising is a really good route for you, right? Because you're going to have a lot of help. You're going to get handed a book here, just execute, and you're good to go. That's
Hmm.
operations people are good at that. But if you're a good leader, ETA, acquiring a business is absolutely a good route for you. So I think people have to do a self
Great.
assessment
Creator,
of where their
great.
strength lies.
Creator, operator, and leaders. Wow, great, great
Operator,
advice.
right?
And what it got to be like a strong leader, you need to be bully. What are the few, qualities a leader should have or strive to have?
Well, leadership. Yeah, you asked me about Logic Bay, and this comes
Hmm.
over as arrogant sometimes,
Okay.
so I apologize ahead of time.
Hmm.
People that know me don't think I'm, but the
Hmm.
success led to strong leadership. Like I can't tell you how many issues we had over 17 years, primarily
Right.
with equity investors, traditional equity investors. I had. So you have stakeholders, you have customers, employees, investors, suppliers, and
Yeah.
spouses and bartenders, right? So when you're running a business, so you got all these stakeholders, and you have to lead them all towards a common goal, and
Hmm.
they're often in conflict, right? So that's why that leadership is so important. But leadership
Hmm.
breaks down into two pieces. One is good communications. You got to be a good communicator. And it's not always everything's peaches and roses like
Right.
you see on social media. It's like being able to go to investors credibly and say, we have a
Yeah.
problem, we're running out of cash. And here are three ways we're going to solve
Hmm.
it, right? That's communicating. And then the
Yeah.
second one is decision making. Every day as a small business owner, you got to make decisions. The U.S. military actually has a
Hmm.
manual on decision making. So, it's like physical fitness. If people get really good at decision
Hmm.
making through different reps,
Yeah.
making many decisions. So, those two things are important, communications and decision making, and that
Right.
combined creates
Yeah.
strong leadership. And I
Yeah, and
think
I
that's
think just
important
to
to
add that in
success.
communication, it's also important the two-way communication, that like understanding the other person as well, not just saying what you want to say, also the understanding
Hmm.
the other. Yeah, listening. Yeah,
Listening.
exactly. So listening and yeah, that's
Yeah.
also important leadership quality. Yeah. So you're
Good
deeply
point.
involved with helping veterans transition as well into entrepreneurship. So how do you help veterans to be entrepreneurs? So, and what advice do you give to veterans considering this path who are listening our podcast today?
Yeah, thanks for asking that. So, it's deeply important to me. So, I was an
Hmm.
Army officer as well. I used to jump out of airplanes and stuff. But Made a little trip
Right.
to the Middle East during that time. But uh, along the way in 2012, me and another Army guy who owned a business, still does, good friend of mine, name's Mike Horn. We started a nonprofit business called Vet to CEO,
Vet to
VETTO
CEO.
CEO.
Right.
So today, 12 years later, we still run that, and we've put over 10,000 veterans through that. And that's we have two programs. We have an 8-week online business accelerator program. It's like a mini MBA, and then we have a separate, more recent ETA program called Pass the Guide On. So that one specifically focuses on buying and selling a business. And that second one, by the way, is not exclusive to veterans. We invite non-veterans into that because there's such a big need for people to understand the buying and selling process that we don't
Right.
limit that to
Okay. So how the Folla
veterans.
Capital is currently structured? Do you have other partners or you work on your own? So how your management structure is?
Yeah, so I founded it with two other partners. One's a former Edward Jones advisor, so he's has a financial advising background. He also had been an entrepreneur, ran several businesses
Okay.
himself, like I had done,
Right.
prior to us meeting. My other partner is a CPA, has a separate CPA firm. He was my CFO when I ran my company that I sold. Known him a long time, so he does fractional CFO. He does CPA,
Right.
tax stuff, and he brings a lot to the business. So those are the three partners, and then we have compliance officers,
Right.
attorneys,
When
and
you take
marketing
in a
people
client
involved
for
as well. We're
fundraising, so you don't
small.
charge anything up front, so all you get paid with the success only, or you have a retainer as well.
Well, we do have retainers, but we have three
Okay.
steps. The first one's free. So that's a kind of an assessment phase. It's about 30 days. We kind of take an x-ray of what you're trying to do and what you're doing now, and then we give you a recommendation,
Okay.
and that's all free. So if our client likes our recommendation, we go into phase two, which is a lot of heavy lifting due diligence. So that's when we
Right.
charge a retainer fee. That retainers ranges from $1,500 to $3,000 range,
Okay.
usually around 2,500, and that's to help us pay
Of
for some of
course.
the
Yeah.
cost of the attorneys and all the other stuff we got to do. And then the third phase is the capital raise, and that's when we take a
Right.
percentage of the amount
So,
raised.
road to the future. So, where do you see Fola Capital in coming year? What's your vision going forward? How do you want to help businesses?
Yeah, well, I'm when I ran my 17-year business, we always struggle to find clients. And since we're in our fifth year now, there is no shortage of people that need capital. So, the internet, like I said earlier, the internet is causing this huge new way of raising capital
Right.
around the world. So we are in the beginning stages of that, and I couldn't be happier, right? So when you couple that trend of innovation through the internet and financial services with capital raising, I mean, I'm a geek, but it's really
Right.
fun to play in that space. And I just see us continuing to grow. We are getting more and more into buy side advising. ETA is like taking off in the United
Right.
States for some reason. I think the internet's
Okay.
fueling that finally. We've reached a tipping point because of the
So, if
internet. So
anybody is
that's what we're
looking
doing
to
now.
acquire a
Buy
business,
side
they can get in
advising.
touch with you and take your advice to raise capital. Okay. How our
Yep.
listeners can connect with you.
Yep. FollaCapital.com, FOLLA capital.com. Just hit up on our website. There's a contact us thing there, or you can
Perfect.
find me on
John,
LinkedIn.
it's a pleasure talking to you. Thank you so much to be here today. All right. Thank you
Yeah,
so
thank
much.
you.
Tahir signing off. Please follow my YouTube channel and goodbye till next time.